Hey, what's up, everybody? How's it going? Hope you enjoyed the nice long weekend. Spencer Israel here with our weekly future show, Futures Trading with NinjaTrader. I've got Jim Cagnina here, and holy moly, are we going to talk about natty gas right now? Natural gas futures are absolutely ripping off of the screen right now. We'll break the whole market down for you. Try to understand why it's happening, but mostly understand where to go from here, how to approach that market. We will also talk about the futures trading in the broad-based indexes, in other commodities, in oil and gold, in crypto, in treasuries. So this is Futures Trading with NinjaTrader, our weekly futures show. Let's get to it. Smash that like button for me. Here we go. All right, joining me now is Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, hope you enjoyed the nice long weekend.
I did. Thank you. I hope you did as well.
Yeah, it was nice. It was nice to get the extra day here. Let's quickly run through the overall market, and then I want to talk about natural gas here. So I'm going to bring up your charts on the screen. We got the mini S&Ps. What do we got here?
You know, we have a classic Fibonacci retracement, right? We started this rally here. This is the wartime rally, I'm calling it, March 15th, pretty much nonstop for 2 weeks. And then we slowly have been retracing back downward, right? This is what we mean by retracement. And I have my inside Fibonacci retracement line right there. I even drew a channel here just to kind of highlight the drama going on right now in the stock index futures with a couple of trend lines down below. We're going to talk about a little bit later in more detail, the 50% retracement, how important that is, the 61.8% retracement, how important that is. And right now, the trend is down. I am bearish here. Anything could happen, but this is a really, really textbook classic picture we're seeing right here in the S&P 500.
Are you seeing the same thing in the other ones in the NASDAQ, and they're also on the Dow?
Yeah, well, yeah, some of them are more dramatic, though. So in the NASDAQ, it's pretty weak. If you think about it, the same behavior, right? We had buying coming in strong all the way to the top here at the end of the month in March, and then we retrace back down. We're way further south. We're by the 61.8% retracement, critical level in the NASDAQ. If we continue our downward path, we could easily make new lows here. So I'm really bearish here in the NASDAQ, even more so than the ES.
Wow. All right. You want to, Russell, here we go. What do we got?
Let's just write. Yeah, Russell is kind of, this is going to be less dramatic, but also less strong. In other words, you know, my trend line at the bottom here, 1922, all the way up to the higher end trend line, 2129. We're oscillating in the middle, and you can see the wave patterns just looking at the candle chart right now. I mean, from a retracement point of view, we're weak also, 61.8%. But I feel like there's more sideways behavior, which can continue here in the Russell 2000.
All right.
Dow Jones. We got to talk about Dow Jones because Dow Jones is stronger. It's
Safety
the strongest.
trade.
Yeah, for sure. We're right at that 50% retracement this time. But I have this little rectangle that I drew down here just to kind of highlight what I'm going to call an area of support. So we have some decent support down here, right between the 38 and 50. So I'm feeling stronger about the Dow Jones futures than anything else.
Yeah. All right, Jim. Let's bring up the chart of the day right now. Natural gas futures at a 14-year high and rising this morning. What is going on?
Spencer, I'm going to have to buy a new, bigger monitor. I mean, it's
going off of your screen.
I know. And this rally it's been going on for a while. I mean, literally, when we made these highs here back in February, I thought it was kind of a, wintertime thing. And, as we go into springtime, there's going to be a depreciation in prices. Everything was looking normal. And then boom, off to the races, nonstop buyers coming in ever since the 15th of over a month, right? Over a month, nonstop buyers coming in. And this is really important for a lot of reasons. But again, this is situation where there's a lot of moving parts, right? You have to get the natural gas. You have to then distribute the natural gas. You have to store it. And then you have a whole process involved here which is all bunched up right now. And this is part of the story here and why prices are so high domestically in natural gas.
Yeah. And for those looking for a reason, if you try Googling, you will find anything from, expectations of a cold front this week, or, Russia is creating chaos in the global energy markets. Both of those things may be true, and yet it's entirely possible that there is no fundamental reason for, or you may also see like a global supply shortage, right? There's a lack of supply of natural gas. That could also be true, but a move of this magnitude is maybe there is a fundamental thing to kickstart it, but that was ages ago. that was a long time ago in terms of price. Now it's a trader's market. That's all this is. This is people just trading this market based on the chart.
Yeah, and there's also storage issues too. So the storage issues are pretty big. And without getting into the weeds, let me just kind of show you a really cool website. This is the U.S. Energy Information Administration website, EIA.gov, division of the Department of Treasury. And this is why it's so important here. I mean, there's a lot of uses U.S. based for natural gas. I mean, you have electric power, you have residential, transportation, industrial, commercial, and there's a lot of things in not only in our supply chain, but an economy and our living that rely on natural gas to just kind of keep moving forward here. So this is going to be a big problem that no one's really talking about when they're talking about inflation. We're talking about soft landing, hard landing, all these other things. This one is going to have an impact from producers all the way through consumers.
Yeah. Yeah, it's remarkable. Congrats to anybody that's been hodling and rolling over their natty gas futures for 14 years now, because it's come all the way back. So as far as the chart is concerned, obviously you got to zoom way out to find any sort of upper resistance here. But how do you approach a market in parabolic mode, Jim?
Yeah, I mean, it's just simply a matter of looking for places to buy. If you're day trading, again, wait for a little bit of a retracement, pull back, look for places to buy, look for previous days data, open, high, low, close. Today, there's nothing, right? So this candle right here, this is 100% buyers. There's no wick on the bottom of this candle. There's no shadow on the bottom of this candle. It's just since the get-go, buyers coming in, buyers coming in, buyers coming in. And there's no wick on the top either. So there's no sellers here. There is really no sellers here. And it takes a bit of bravery to buy the top, right? It does. But there's no end in sight. I don't know. We'll see what happens here. What kind of regulatory assistance, if any, pops into this market right now. But you're right. It's crazy.
Remind me what the limit bands are.
Oh, good question. I don't know off the top of my head, but you could see from these candles here,
7%,
they're pretty
14%.
Yeah, I don't know what the limit bands are, but look at the high to low is pretty significant here today, and we're still trading, right? We haven't hit lock limit up yet, so that's a good question. I do not know the answer to that, but it's a crazy market for sure.
BNZNB, who, by the way, said he downloaded NinjaTrader over the weekend to check it out. He's asking if you should sell natty gas. That is scarier than buying it, frankly.
Yeah, I mean, it's on a trending. My answer to this is no. I mean, there's no area of resistance that we could see on a chart, right? You can't see it, and until you could see an area of resistance, I would not be trying to get short a trend like this. A big psychological problem a lot of folks have is when they see a trend like this, they say to themselves, "It can't go any higher. I'm going to sell it." Well, you know what? It could go higher. So no, I would be careful with that one for sure.
Yeah. And then Jim, obviously we've seen commodities do this before. Actually, we've seen commodities do this year, frankly. And typically, like we saw this with wheat and corn and soy right when Russia invaded Ukraine. And do you agree that the way this plays out is that this market comes crashing down, or do you think it's more of a slow bleed?
Yeah, I would. I'm gonna, coming into springtime, but again, I think it would be a slower bleed.
Okay.
I don't think we're just gonna crash all the way back down to the bottom of the Fibonacci retracement. I mean, it's going to take some time. Just the whole nature of this commodity and how you get it to places. If you're talking about liquefied natural gas, you're talking about nat gas. How you move it around the globe. It takes time and effort and coordination, supply chain, and transportation, and all of this stuff that just doesn't get turned on overnight. So yeah, it'll be a little bit it'll be slow.
Okay, interesting. I'm looking, across the board here. I'm looking across the markets to see if there are any other markets moving with natty gas, and the answer is not really. Right? Like oil's flat.
Yeah.
It's up 0.5% today. Um, I mean,
Well,
wheat
yeah.
is wheat is up, but like 2%, right? But like nothing moving with anywhere near the velocity of natural gas today. So it's kind of moving by itself.
Yeah, its tenacity is off the chart. It's a unique time in our existence, and it's a unique pattern for sure. If you even look at the crude oil futures, which I have up here, this is the WTI West Texas Intermediary Light Sweet Crude. You can see, yeah, we broke out of the rectangle. I had a rectangle here. We broke on out of it, and we're back in bull mode here, but nothing to compare to what we're seeing in the nat gas chart, right? We're slowly creeping our way up and maybe slowing down. I don't know, but we're $106, $107 in that range on crude oil. So it is bullish for sure, but not in the same order of magnitude, not even close.
Just to put a bow on the natty gas thing, your hands off right now?
Totally.
Yeah, okay. All right.
Totally. Yeah.
Just because
Again,
for the sole reason that it's hard to control your risk, right?
well, I mean, so all right. So buying, when you're trying to buy a top, this looked like a good top to buy right here. What's the day? August 5th. And then, okay, well, here's the next top, August 6th. I mean, it's just like I said, you need to be brave, man. And you got to hop on the bandwagon here. Eventually it'll end, but, nobody knows.
Yep. Okay. Where do you want to go next?
On the flip side of that, though, on the downside, you do see the opposite behavior in U.S. Treasury bonds, right? This is the 30-year U.S. Treasury bond, and this is a daily chart that we're looking at. This is the futures. And when I say 30-year Treasury bond, this is at the farther end of the curve. It's not a true 30-year Treasury bond because the average duration is a little less in this particular basket that we look at, but it's still a long-term bond, right? And it has been nonstop sellers since the beginning of March, right? I mean, yeah, we had a little bit of a risk-off move up here when some stuff in the Ukraine freaked everybody out, as it should have. But then we kept on our merry way. And again, a lot of this has to do with interest rates and what's projected at the Fed funds rate trickles all the way up. So I am very bearish here, and it's kind of like an opposite image of the of nat gas. You got to be brave to sell it, but I feel like we have a lot of room on the downside to go down.
Yeah, this has been the overhang, arguably the thing that people who are bearish are pointing to is look at the bond market. Look what it's telling us. The bond market is the so-called smart money. The stock market is the so-called dumb money. And the bond market is saying, watch out. And, okay, so do we have any – maybe I should have mentioned this off the top, Jim, but do we have any active trades on in anything right now?
Well, we did, but while we were talking, I heard you are filled. Let's see what that fill was. Kind of lower that. Okay, so I was in the Treasury bonds earlier. This is in sim mode on the NinjaTrader software here. Just kind of let me show you where we entered here. and this morning when we did our live trade idea setup. So that's right at 104.28. We took a little bit of heat all the way up to here, did not get stopped out, and stayed with the position all the way until through the broadcast with me and you. We were talking, and this is where we got filled at 13. So from 28 to 13, that was a good, that's a good 15 or so point or tick move down. And that's where we got filled. Our stop, we moved our stop down to here. So I'm going to cancel that. Now we don't need it. So again, the idea and the trade idea was, hey, I'm bearish here, big time. I want to be patient. I want to see a retracement back up on it. This is a 10-minute daily chart. I want to see retracement back up, and then I want to try to get short again. And that's exactly what we did right here. So we ended up getting short after, again, we had to wait for a long period of time. And it's really important that you're patient when you're day trading. This is my number one rule here. And so that one worked out. They don't always work out. Sometimes they don't, but this one did.
Nice. All right, let's run through the other markets quickly, and then we'll get to the tip of the week here. We haven't talked about
gold.
Gold, yeah, gold. That's a good one. We haven't talked about.
So gold, we're back in bull mode in gold. I mean, this is a really nice chart here. You can talk in terms of all sorts of patterns that we're looking at here, but the trend is up. Let me get rid of my crosshair so I can point better. Trend is up right now ever since, the end of the first week in April, right? Buyers are coming in, buyers are coming in, buyers are coming in. It's still looking pretty strong. Now, it's not crazy rally. It's not that risk off rally we saw where we got all the way over 2,000. To be exact, we were, 2083, give or take. We're not that level of excitement yet, but we're getting there. I mean, this is a nice kind of move up. We're kind of retracing along pretty nicely. And I am bullish on gold right now. I'd be looking for places to buy on a day trade point of view.
Okay. Does that extend to the rest of the metals or just gold?
Yeah. So, I mean, silver and copper are a little different here. In this particular case, you do have that risk off flight to quality that you don't see always in the other metals, and they're not always 100% aligned. Okay. I'm not charting those two right now, but this is a pretty good pattern. Now today we have a really nice wick at the top. We'll see if that is going to result in any kind of turnaround at all. But right now I'm not holding my breath, man.
What about Bitcoin? Bitcoin's a risk on asset.
Bitcoin is, I mean, we're in bear mode, man. I mean, we had that gap up. We talked about this end of March, and it's been nonstop selling ever since. And again, I'm looking for places to sell. If we might close below the 61.8% retracement, and when that happens, in my mind, the trend is firmly established that negative, in a bear mode.
Yeah. So
we could see these wicks get attacked down here, 835, and then all the way down here at 33,920, 295. So I see nothing but downside. Now, the good news about the futures, right? The futures market is you can go short. And we talked about this also. You don't have to borrow Bitcoin from anybody. Your broker, whoever it is. You can go short if you want, if you feel that there's downside, or you can go long if you want. I don't know. My opinion is not always right. I'm just looking at this. This is looking pretty negative.
Yeah. All right. Do we cover? We didn't cover Fed Fund futures. We didn't cover U.S. dollar. Do you want to cover either of those? Or
the only other dollar really, and we'll look at wheat really quick.
Wheat is, or Euro FX. I had a feeling
the Euro FX is in definite bear mode also, and really, the interesting thing about the Euro FX is when you compare ECB's QE. Removing, or QT, I guess, what is it, quantitative tightening, and their interest rate policy versus the U.S. The U.S. at this point appears to be way more aggressive. And because of that interest rate differential perception, I think you're seeing a bear market here in the Euro FX for now, as we're making new lows here. And I'd be looking for places to sell Euro versus the U.S. dollar. Whether you're doing cash over the counter Forex or futures, doesn't matter. You're going to see the same pattern.
Gosh, is there anything you like here, Jim?
Well, I mean, don't forget, I could go short, so I like it all, right? I don't, it's, this is we are in unique time, Spencer. Wheat is holding its own, right? Let's kind of be positive for a second. This is Chicago. Now, there's all sorts of problems with wheat in Europe and Asia because Ukraine and Russia are two big distributors, right? They're two big exporters. And in Ukraine now, you can't get into the field to, do your job, right? So it's a big problem for sure, especially with respect to some of the, and I use the word poorer countries, smaller countries that are rely on that as their source of food. And it's really going to be a problem. Here, domestically, this particular wheat market we're looking at right now is kind of in a nice channel. We drew this channel a long time ago, from early March, and we kind of oscillated below it. Now we're oscillating back in it. And yeah, it looks like we're a little bullish right now. We're on the uptrend. But until we get to my trend line here, I am not worried in the slightest here. That's 1158 for those of you who are taking notes at home.
Yeah.
We're right to that 38.2%. So wheat's holding its own. MACD's crossing the zero line, kind of hanging out at the zero line. We like that. So that should be a little less uncertainty in this particular futures market.
Okay. All right. Was that it? Do you want to get to the tip of the week, or was there more that we had to cover?
Yeah. Well, okay. So let's go to the tip of the week. I'll put the ES up, and I'm ready for you.
Let's do the tip of the week here.
All right, tip of the week. This is just focusing on the S&P 500. And the reason I'm focusing on the S&P 500, because it really is kind of a dominant keystone marketplace, if you will, that everybody looks at, and everything spirals off of that right here. So we literally, we're gonna keep this number in mind, 4320. If we close below 4320 on a daily chart or a weekly chart even, we have a bear target here, which is very far south. It's going to bum out a lot of people. And let me just show you where I'm at right here in my Fibonacci right here, 61.8% on this chart. It looks like we're far away, but we are not far away. We're only about 65 points or 65 handles away, easily achievable in the blink of an eye in this market. So this is where I'm drawing the line in the sand. If we close below here, my fear, and again, this is my opinion, is we're going to be marching back down to these lower wicks down here quickly.
Can you just repeat that level again?
So, all right, the line in the sand for me is 4320. If we see a daily candle close below 4320, that is going to trigger, in my mind, a more extensive bear move all the way down to these new lows, 4120, 4130, give or take, and maybe even past that to 4091.
4320 was the low from the 17th. Well, a month ago, actually, right? Yeah, March.
This is the 15th, right? This is when that weird kind of wartime rally happened, right?
Right,
and there's
right.
Fed speakers involved and all. Yeah, that's that low, and that's definitely on the radar screen. Definitely a target.
Okay,
for sure.
So let's play this out a little bit. So let's say we do get there, and then you really get bearish, right? Where's the next level of support below that? If there is.
Well, again, it's this little tiny shelf here you have between the 15th low and then the not all-time low, but recent lows, which is at 4092. Hopefully there'll be some support down there. And remember, everyone's saying, hey, if we're below this line here, we are in recession. Now, economists are all over social media and everything saying, typically we won't be in recession for another 2 years. But keep an eye on that line in the sand also, that 4092. That could also spell some trouble here. So hopefully we will have some area support down here. If we get to that bottom target, who knows? I'm a little worried though, Spencer, to be honest with you.
Is there a time on that, or because there's a difference between hitting that on Thursday and hitting it 3 months from now, right? Because 3 months from now implies that we went nowhere for 3 months, but you hit it this Thursday, then that's a pretty nice sharp move down.
Yeah, so it's a good question, and don't forget there's midterm elections this year, so you do see a lot. You do see a lot of nonsense as we get closer to that this summer. But I'm looking. My point of view, my time frame here. We're in April. By the end of May is where I'm worried at. that fast, that 6-week period here by the end of May. Wait for the next FOMC meeting to see what happens, because that's in 20 days or something like that. I could probably even tell you exactly when that is.
It's early. It's shoot. When is it? It's early May, I thought. Isn't it? Early May?
Yeah, it is. And I'm going to tell you exactly, because I'm going to get my Fed funds tool up here. So this is 16 days. 16 days we have this this meeting. And just to kind of look at the probabilities, according to the CME Group's Fed funds futures, again, we have that 50 basis point hike coming up May 4th, maybe another 50%, 50 basis points, the next one, and so on and so forth. So depending on what happens here, what the press release is, what, all the data is, that could be a trigger also. So I'm thinking next 6 weeks, I'm worried.
I do want to note that the overall market here, whether you're looking at the S&P or the Dow Jones or the NASDAQ or the Russell, all just really in the last few minutes here, Jim, started leaking. We have turned red across the board. We're red on a close to close basis. We're about to be red on an open basis in a lot of these here. So, well, at least I'm looking at the indexes, but in the futures, yeah, we're red across the board. So we've been leaking pretty nicely in the last few minutes.
Yeah, and you can see, yeah. And we broke yesterday's last session's lows, and now sellers just jumped on the bandwagon here. I don't know if today's going to be overall, if we're going to make new lows today. I don't. A lot of volume is established early today up at the top of the value area, the upper left. So if you kind of look at that golden bar in the S&P, pretty close to that magic 4,400 number, 4,396 number. This area up here is still going to act like a little bit of a magnet until some key levels get broken through, S1 and then the bottom. If we start making new lows, all bets are off. But I don't know. We'll see. This kind of normal volatility is normal. The dominant candle is right here on the open, 930 to 940, and from high to low, just to kind of highlight that, that's a 25 point candle. That's a pretty big candle. So we'll see if that dominance happens or not. Alternatively, we have a little mini point of control way down here at 43.63. I'm not ready to hit the buy button yet, but my guess is we'll be range bound today.
All right, Jim, a couple minutes left here. Give us a quick preview. When if people who want to know more, learn more, where can they hear from you?
Every morning, 9:10, we look for trade ideas in all these markets, looking at the same setup that me and you are talking about here. It's 9:10 East Coast time every morning, and then again 3:15 end of day East Coast every afternoon. You can find it on the events page. So ninjatrader.com/events. It's kind of an open community, just kind of like this is. People could pop into the YouTube chat, make comments, observations, throw trade ideas out, ask questions, tell me I'm a horrible trader, tell me I'm a great trader, whatever. I got a thick skin. It's a lot of fun. So I suggest everybody go there. And also ninjatrader.com, you could download a free trading platform and just kind of experiment to see if this is for you.
That's the move. Jim Cagnina joins us every single Monday on our channel to run through the futures markets and answer any questions that you may have about trading futures, because we probably don't talk about that market enough, and that was the impetus for this show. So Jim, great job today, as always. That'll be a wrap for us here for the week. We'll talk to you again next week, and we will be keeping a very close eye on natty gas futures. I will, at least today and every day until this parabola stops parabolaing. But thanks a lot. We'll talk to you again next week, and good luck out there.
I appreciate it, Spencer. Thanks for having me, and you have a great week.
All right. Guys, that'll be a wrap for futures trading today with NinjaTrader. We're going to go live to our next show, Benzinga Live, myself and Aaron Bree. That show is starting right now as I'm ending this show. Got a big slate of guests today, so stay tuned for that. I'm going to end this show, redirect you guys over to that. If you haven't already, do me a solid and hit that like button. I appreciate that. And please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. You want to learn more about futures trading, about NinjaTrader, there's a bunch of links in the description of this video. I highly recommend, if you're interested in futures, check it out. All right, I'm done. I'll see you guys over on Benzinga Live. Here we go.